Welcome to the recap of data released over the last week. The downturn in global economic activity deepened during November. Output fell at the quickest pace in almost 2.5 years following a similarly steep drop in new order intakes. There was slightly better news on the price front, however, as rates of increase in input costs and output charges both eased further. The J.P. Morgan Global Composite Output Index fell to 48 in November, from 49 in October. The headline index has signaled contraction in each of the past 4 months. November saw manufacturing output and service sector business activity fall at the fastest rate since June 2020. The J.P. Morgan Global Services Business Activity Index fell to a 29-month low of 48.1 in November, from 49.2 in October. The index has signaled contractions in 3 out of the past 4 months. Output declined in most of the nations covered, the exception being India, Brazil, Japan, Spain, and Ireland.
Economic activity in the services sector grew in November for the 30th month in a row, with the services PMI registering 56.5%, as per the nation's purchasing and supply executives in the Services ISM report on business. November reading was 2.1 percentage points higher than October's reading of 54.4%. The Business Activity Index registered 64.7%, a substantial increase of 9 percentage points compared to the reading of 55.7% in October. The New Orders Index figure of 56% was 0.5 percentage point lower than the October reading of 56.5%. Supplier deliveries continued to slow, albeit at a slower rate in November. Based on comments from Business Survey Committee respondents, increased capacity and shorter lead times resulted in a continued improvement in supply chain and logistics performance. A new fiscal period and the holiday season contributed to stronger business activity and increased employment.
New orders for manufactured goods in October, up 12 of the last 13 months, increased $5.8 billion or 1% to $556.6 billion, the U.S. Census Bureau reported. This followed a 0.3% September increase. A steady increase over the last 3 months augurs well for an otherwise slowing economy. Shipments, up 19 of the last 20 months, increased $3.9 billion or 0.7% to $554.8 billion. This followed a 0.3% September increase. The unfilled orders to shipments ratio was 6.03, unchanged from September. The inventories to shipments ratio was 1.45, unchanged from September. New orders for manufactured durable goods in October, up 7 of the last 8 months, increased $3 billion or 1.1% to $277.4 billion, up from the previously published 1% increase. This followed a 0.2% September increase.
The international goods and services deficit rose by $4 billion to $78.2 billion in October, the data published jointly by the U.S. Census Bureau and the U.S. Bureau of Economic Analysis revealed. This reading came in lower than the market expectation and may have a modest impact on the growth during the current quarter. October exports were $256.6 billion, $1.9 billion less than September exports. October imports were $334.8 billion, $2.2 billion more than September imports. The October increase in the goods and services deficit reflected an increase in the goods deficit of $6.1 billion to $99.6 billion and an increase in the services surplus of $2.1 billion to $21.4 billion. Year-to-date, the goods and services deficit increased $136.9 billion, or 19.9%, from the same period in 2021. Exports and imports have both increased by the same percentage.
Mortgage Bankers Association released its weekly mortgage application survey for the week ending December 2. The Market Composite Index, a measure of mortgage loan application volume, decreased 1.9% on a seasonally adjusted basis from 1 week earlier. The 30-year fixed-rate mortgage fell for the 4th week in a row to 6.41% and has now fallen 73 basis points over the last month. Further, the refinance share of mortgage activity increased, whereas share of adjustable-rate mortgage applications decreased.
Weekly claims for first-time unemployment benefits were 230,000 for the week ending 3 December, an increase of 4,000 from the previous week's revised level. The previous week's level was revised up by 1,000 from 225,000 to 226,000. Continuing claims are seasonally adjusted. Insured unemployment rose to 1.67 million for week ending 26 November.
According to University of Michigan's latest consumer survey, consumer sentiment in December improved from the previous month. The reading was 59.1 in December, versus a forecast of approximately 53 and an actual of 56.8 in November. Inflation expectations in December changed slightly from the month prior. 12-month inflation forecast dropped for second month in a row to 4.6% as compared to 4.9% in November and 5% in October. 5-year inflation forecast remained at 3% as earlier. We will now leave you with the effect of the aforementioned data points on the yield curve, dollar index and on the stock market indices. If you liked this note, then please subscribe for more updates. Cheers!